As you can see here on the pound yen, we're involved in a trade that's currently up a little over 300 pips, right at 310 pips, and also up at a 4.4 to 1 reward to risk ratio. One of the main differences between traders that make money and traders that lose money is that as money-making traders, we have a way of trading by combining a few different technical factors that gives us a high probability of making money over time. Losing traders normally do not have that at all. Most of the time, someone that's losing money from trading is trading based on emotions like fear, greed, FOMO, fear of missing out, based on things like a gut feeling, and they just want to be involved in the market. And that's exactly how you need to trade if you want to lose money. So in today's video, instead of you taking the route of trading based on emotion, I want to show you one of my favorite approaches to trading and the combination of technical factors that I like to use myself that put me in a position to have a high likelihood of making money from a specific trade. So if that sounds good, go ahead and smash that like button for me. Go ahead and subscribe if you are new. We come out with content like this each and every week. If you haven't followed us over on Instagram yet, make sure to do so at the Trading Channel, and I'll see you right after the intro and disclaimer. Welcome back, and let's go ahead and get started right now. And I'm actually going to exit this trade because I'm not loving what price is doing right now. I'll explain that in a little while when I talk about why I take targets on these types of trades. But there we are, exited the position around $9,600. Actually, I think that was $9,300. I can't remember, but just now got out of it. And now what I want to do is share with you the 3 steps I take when placing trades like this. It's a very simple 3-step trading strategy that if you use, I truly believe will increase your amount of profitable trades dramatically. So let's actually go ahead and dive into all the reasoning behind entering this trade. The first step I take when doing this and when trading in this way, you have to understand I've been trading for a very long time. I have different ways that I trade, but in terms of this specific type of strategy, a trend continuation type strategy, the first thing I have to do is align myself with the trend. All I mean by that is I look to ensure that I am having higher highs and higher lows in price if I'm going to be buying. In this case, it was a buy trade, so I was looking for a high, a higher low compared to our previous low, this one's higher, and a higher high. At the point that I see a higher high, that is step 1, and it is just to align myself with the trend of the underlying market. My ceiling fan's on. It's probably messing with the audio. Hold on just a second. Hopefully that wasn't too bad, and hopefully that takes care of the audio. Maybe it's a little better now. But anyway, after seeing a higher high in price like this, that's step number 1. Now I know that I'm in an uptrend in price with this specific market. If I know I'm in an uptrend, I don't want to buy these brand new highs. I want to buy at a discount. I want to buy something called a pullback. When I'm buying a pullback, I don't just want to buy randomly because the chart pulls back. I want to buy at an area of value. So there are 2 things that I use as areas of value. You could use a lot more than 2. These are just the 2 that I use, and they are major levels of structure, like this support level we had right here, and it was also tested multiple times, which is what makes it a major level of structure. And also I like to use moving averages as a major level of major area of value, not level of structure, but as an area of value. So in this case, step number 1, ensure that we are in an uptrend if I'm going to buy. How do we ensure that we're in an uptrend? By looking for higher highs, higher lows, and higher highs. Step number 2, ensure that price pulls back to an area of value, whether that be something like a moving average or something like a major level of structure that's been tested multiple times. Step number 3 is nothing more than look for buying pressure. So in terms of buying pressure, I have a ton of different ways I look for buying pressure. You can use things like candlestick patterns. You may want to use things like chart patterns. You may want to use just a big green candle or something like that. In this case, that's literally what I used. This big green candle showed me buying pressure on the pound yen coming out of an area of value and while I'm in an uptrend. And I know what you're thinking, Steven, that's just 3 steps. No way that works. You would be so surprised at how simple professional traders tend to make trading. Now, one more bonus rule, and this is the only time that I look for this setup, okay? This is what actually makes the difference. This setup, if you trade it every single time it ever happens, if you were to trade it up here and up here and up here and up here, when the market's trending, you're going to do really well. When the market's consolidating, you're going to do really badly. And that is the case in terms of almost any trend continuation strategy you try to trade. But if you limit the times you take this trade to only when price is bouncing off of a higher time frame level of structure. So in this case, on this pair, on the pound yen trade, price was coming off of this level of support. And this level of support was a level that had been tested by price and used as major support multiple times. So as we're coming back down into this area, using my higher time frame, which in this case is the 4-hour chart, using my 4-hour chart to show me we're bouncing off of a major level of structure. Then waiting on the 1-hour chart for what? Just this 3-step process, guys. On the 1-hour chart, after that first condition is met of 4-hour charts bouncing off of a level of structure. After that, I'm just waiting on those 3 things. I'm waiting on price to create a higher high, a higher low, and then a higher high. I keep this extremely simple by calling this a 1, 2, 3 move. You may have heard of me talk about it if you've seen some of the other videos on the channel. After my 1, 2, 3 move, I'm waiting for a pullback into an area of value, like a major level of structure that's been tested multiple times, or like a moving average. And then I'm waiting for buying pressure. But initially, I must see price bounce off of a major level of structure. And I find these not on the 1-hour chart, I find them on a higher time frame. So in this case, it was looking at the 4-hour chart for that major level of structure, dropping down to the 1-hour and looking for this 3-step process. I truly believe doing this is going to give you a much better chance of success if you wait for this every time you trade. Every time you're going to place a trade, wait for this type of scenario. Again, as we talked about in the intro, professional traders, money-making traders, the difference is they have a process that provides them with a profit over large sample sizes, over a long period of time. Not every single trade wins. This doesn't work every single time, but having a process that provides a profitable edge is the first step to becoming a profitable trader. So here on the pound yen, I just use that 3-step process, which simply is waiting for price to be in a particular trend. This gives me a directional bias. Do I want to go long or go short? The opposite of these rules would be true to go short. Hopefully that's pretty clear. Then after my directional bias, all I'm looking for, higher highs and higher lows. After that, I want to see price pull back into an area of value, like a level of structure or a moving average. And after that, I want to see buying pressure to prove to me that price is likely to go higher and continue in trend. And I only take these types of trades when price is bounced off of a major level of structure. So all this 3-step process is a confirmation that price is likely to continue up after bouncing off of a major level of structure. After this bounce, one of 2 things is going to happen. Either price is going to continue higher and break out of the resistance level, or price is going to reverse and break out of this support level. Eventually, they could consolidate for however long, but eventually that is going to happen. This 3-step process just confirms to a certain degree of accuracy that the market is more likely to continue higher than it is to continue lower. It's not a guarantee. It just has a higher likelihood of going up than going down. And if we use good stop and target placement, we can capture trades like this one here on the pound yen. Now, I know what you're thinking. Steven, if trading was really that easy, then everyone would be profitable. You are absolutely right. If trading was that easy, if I could explain it in a 10-minute YouTube video, then everyone would be profitable. Trading is not that easy. Entering a trade is that easy. In terms of the way I enter trades, I did not hold anything back there for this type of trading opportunity, for this strategy itself. That's everything I look for. So actually entering the trade, that's my reasons. That's why I entered the trade. There's nothing else. But that's just entering a trade. There is a huge difference between trading and entering a trade. And right now you may be like, oh, Steven, no, there's not. In your head, you're going, why is that the case? So let me explain it with an example. Right before this pound yen trade that you just saw, right before that, I entered 4 trades last week, right before entering this trade with the same exact rules, with the same exact setup. I entered 4 trades and I lost all 4 of them. Was the trading entry any more difficult? Was the reason I entered those trades was exactly the same. So the entry was absolutely no different. But the first 4 trades lost. After that 4 trade losing streak, how hard do you think it would be for you to enter the 5th trade based on the same exact thing that you just lost 4 times in a row? Based on the same exact strategy, the same exact rules? If you're being honest with yourself, at least for the majority of people watching this video, you would not have entered this trade. You would have let this one go. And what happened because of entering this trade, over the past 4 trades before entering this one, I lost $8,000. On this one, I won close to 10 grand. So what happened here is this was a 10% swing in my account that would not have happened if I didn't have the other parts of trading, which are trading psychology and risk management. If I didn't have good trading psychology, I would not have placed this 5th trade. And instead of being up 2% for the week last week, I would be down 8%. So a 10% swing in my account due to nothing more than good trading psychology. Entering a trade can be that simple and that easy, and can have a profitable expectancy over a long period of time. But trading is not that easy. Trading comes down to a lot more than the reason you enter a trade. Let's dive into that right now. If trading strategies and entering a trade can be that easy, then why is it that over 90% of people that try to trade fail? Based on my experience working with traders, 90% of people are not willing to take the action and approach trading in the right way in order for them to achieve success. Let me explain this with a little bit of an analogy. So right now you could go to Chris Hemsworth's trainer, his personal trainer, Thor, his personal trainer, and you could have him come to your gym and you could pay him $10,000 a month to be your personal trainer. Do you think after 6 months to a year that you would look like Chris Hemsworth, that you would be ripped, that you would lose weight and gain muscle throughout that time? Maybe. Now let me ask you this. What if you did that, but you just sat there and you watched him the entire time, every time he came to the gym, and you didn't put forth any effort? You didn't try. You never lifted a single weight. You didn't follow the dieting plan that he told you to. What if you did nothing but sit there and watch him? Would you gain any muscle or lose any weight? No, of course you would not. Watching someone do something gets you absolutely nowhere. But for some reason, a ton of people, and if you're still here on this video, I doubt you're like this. I'm just trying to explain why people normally don't make it in the trading industry. So many people think they can watch a 20-minute Forex video and then go start trading in Forex. And I feel bad for the people that have already clicked away because they watched the first 10 minutes of this and now they're going to go out there and try to trade like this. They're going to lose 4 or 5 in a row. They're going to switch strategies and slowly bleed their account. The way to avoid that is to put in the effort, put in the work, and the work is what I'm about to talk to you about right now. But you could watch, just to hit on this a little bit further, you could watch 100,000 YouTube videos about trading and be no better at trading by the end of it. You may know more about trading, but knowing about something and being good at it are 2 completely different things. You could go spend $20,000 on some Forex course that somebody was teaching. But if you didn't follow the instructions or do anything that they said, if you just watched the course, you wouldn't be any better at trading. Hopefully that makes sense. Again, go back to the analogy of you could sit there and go to the gym and pay your membership every month, but if you just watch everybody else work out, you're going to get nowhere in terms of bettering your body. So in trading, what you have to do is actually put in work to gain the other parts of trading besides the technical part. Now, the technical part is important and takes practice, but someone can learn a strategy literally in a 10-minute video. And then if they put forth the effort to practice it, test it, create a risk management plan around it, create good psychology within themselves, those last 2 are extremely hard, then they can move on to increasing their chances dramatically of becoming a profitable trader. And this is how we do it. So in trading psychology, there are 2 things that are going to play the biggest roles of your trading psychology. That is belief and fear, or confidence and fear. And what I mean by that is we must have confidence. We must have belief in the system or strategy that we're trading. If you don't have belief in that strategy, you're going to lose 4, then miss out on your winning trade on number 5. You're going to end up trying to jump into trades too early, or move your stop loss down and end up losing more than you're supposed to. You're going to make so many mistakes if you don't have belief in your strategy or system that you'll never be profitable unless you have belief. And if you're constantly scared and in a state of fear when you place trades, then you are constantly going to make emotional mistakes. You're going to be super emotional about the money that you have on the line. And because of that, again, you're going to end up making mistakes that diminish your possibility of being profitable. So what do we do? Let's tackle belief first. How do we increase belief in a way of trading? You could literally take what I just showed you throughout this video. Waiting for price, I can explain it in less than 30 seconds. Waiting for price to bounce off a major level of structure on a higher time frame. Waiting for a 1, 2, 3 move to show you higher highs and higher lows. Waiting for a pullback into an area of value, and then waiting for buying pressure after that area of value. That can be your way of trading, your trading strategy, but that's nowhere near enough. Now, in order to increase trading psychology, we have to increase belief in that strategy. So what's our first steps in doing so? Your first step is to have that rules-based strategy. Have a strategy, have a set of rules you can stay consistent to, because you can't believe in something that you're not consistent to. What are you going to believe in? Your gut feelings, your emotions? That's not how you trade. What are you going to believe in? Your experience? What if you're brand new? And if you're not brand new, but you're still struggling as a trader, then your experience isn't there. So you have nothing else to believe in but a consistent strategy you trade based on. So your first step, create that consistent strategy. Again, feel free to use the one in this video. You're not going to believe in it though, just because you watched a 20-minute video. You're not going to believe in it just because it's a rules-based strategy. Your belief is going to come down to you seeing it work. You practicing it to the point that you can trade it over and over. You can see it in a snap. You can see your exact setup really, really quickly. Now, in order to get there, you have to practice. In order to get to a stage of belief, you have to have experience seeing that strategy make money over time. Now, there's more than one way to do that. My favorite way, and what I always suggest, because it's the least amount of time consuming, or the least time consuming way to do so, is by backtesting. And you may be thinking, if you're someone who has backtested, man, but that takes forever. Yeah, backtesting takes a long time, but in order to gain that much experience in real markets, it would take years. In order to gain that much experience with a specific strategy, if you're not backtesting, you have to do it in real time, which is going to take you way, way longer than the process of backtesting. So how do we gain belief? Have a rules-based strategy. Test that rules-based strategy. Testing is going to do two things. It's going to allow you to have that practice, to train your reticular activating system, to train the part of your brain that sees patterns and can react to those patterns really, really quickly. In trading, whether you're day trading or swing trading, you need to see your setup immediately. You need to have that much practice with it. So backtesting is going to give you that practice you need for you to be able to spot the pattern quickly. What else is backtesting doing? It'll show you out of a large sample size if this specific strategy made money or not. And you seeing the fact that it made money out of a large sample size is inevitably going to do what? Increase your confidence, increase that belief factor that you have and that you need to have better trading psychology. What else can we do to increase belief outside of just backtesting? And for those of you who don't know what backtesting is, I have a full video on it. I'll put it in the top right hand corner of the screen. You can literally go to YouTube and type in backtesting and find one of my videos on it very, very easily. That's backtesting, right? That can increase belief. After we've backtested, another way to increase belief is to demo trade. A lot of people say demo trading is completely irrelevant. Not if you're trading on demo with a specific trading plan, because if you're seeing yourself go in and out of trades in a live market situation for, let's say, a month, and you come out the other end of that, following all of your rules of your strategy throughout the entire month, and you're profitable throughout that month, you're going to have even more belief in your strategy. So backtesting, having a rules-based strategy obviously is number one. You can't test or be consistent to anything that's not rules-based. Having a rules-based strategy, backtesting it, and demo trading with it are how we increase the belief factor. Now, earlier I said there's two main parts to trading psychology: belief/confidence and fear. So now that we've increased belief, we have to decrease fear. Those are the two main drivers of trading psychology. If your fear is too high, you can't stick to a trading plan. Your trading psychology is going to be shit. If your belief is too low, your trading psychology is going to be shit. So how do we increase belief? We just talked about it. Now, how do we decrease fear? The fear you have when you are in a trade only comes down to a couple of things. It's either you don't believe in the system you're trading. You've never back tested to see that it comes out profitable over long periods of time, or you're risking too much when you're trading. Your risk management is off. These are the two most important factors of our trading. It's having good trading psychology by believing in the system and reducing fear by having a good risk management plan. The way we decrease fear is by risking less per trade. If you get into a trade and it makes you highly emotional thinking about how much you're going to lose or could lose possibly in that trade, then your risk management is off. You can't be highly emotional, expect to be a good trader. That's not ever going to happen. You have to be emotionless. How do we get rid of emotions? We decrease the fear by decreasing the amount of money we're losing on a specific trade. This is called risk per position. Personally, I risk between 1% and 2% of my total account value per trade. Every time I place a trade, it's only risking between 1% and 2%. You have to look at yourself in the mirror, though, and ask yourself what your risk tolerance is. You may want to risk less than I do, and you may want to risk more. That's a highly personal decision. But the less you risk, inevitably, the less scared you're going to be if that trade starts to lose. And the less scared you are, the less emotional you are going to be if that trade starts to lose. So now hopefully you're starting to understand that there is a huge difference between entering a trade and professional trading. Entering a trade very well can be super easy. Entering a trade can be explained in 10 minutes. I did it at the beginning of this video. As I said, trading isn't easy, but if you were to ask me, Stephen, why did you enter that pound yen trade? I would tell you the exact same thing I told you in the first 10 minutes of this video 100 times. There was no other reason. So why then am I consistently profitable when other traders can't be or aren't, when 90% of people lose? It's not because I have some super secret strategy that doesn't exist. The real reason is because I have mastered trading psychology and I'm really good with my risk. I know how comfortable I am with what amount of risk I use. I know my own risk tolerance and I adapt every trade to that risk tolerance. That's the difference between someone that's a professional trader and someone who's just out here entering trades. So the way you become the guy that's the professional trader, the way that you work out with the personal trainer, the way you actually gain muscle and lose weight, back to the analogy I did earlier. The way you become a professional trader is by putting in the work to build your rules-based strategy or learn one, to test it a ton, to test it so much that your eyes hurt. Look, it happens. That's why you need some of these blue light glasses. To test it to the point you can spot that pattern extremely quickly, to test it to the point that you're confident that that strategy will make money in the future, because confidence is a huge part of trading psychology. And then look in the mirror, ask yourself, what do you need to be risking on each trade to keep you from being hyper emotional while in those trades? If you accomplish those two parts of your trading, your chances of success will skyrocket. Almost no one even thinks about, much less puts in effort towards trading psychology and risk management, which by far are the two most important parts of a trader's likelihood of success. So if you're having trouble with one of these two aspects of your trading, we actually have a completely free beginner course that I did that explains a lot more about both of them. You can find that at www.ttcforexcourse.com. If you want a little more advanced training, then we do have a little bit of space available in the EAP Training Program, which is the flagship program we have. This is a mentor program, meaning that it not only comes with a full training course that teaches you everything you need to know to go from step A to step Z. This is an organized course as if it was some type of like college education course. Completely organized step by step to get you from basics to building strategies, to learning the strategies I trade, to learning about risk management and trading psychology, to building your own trading plan after backtesting and putting in the work to build that risk management plan. Not only does it come with that full course, but it also comes with my personal support, as in anytime you have questions that are trading related, you're going to send an email to a specific email address, and I'm going to be answering those emails personally for you to ensure that you understand everything you need in order to take your trading to the level you want it to be. Also included in this course is a Monday market breakdown video I do every Monday explaining the areas in the market I'm looking to trade in, and it comes with 3 to 5 trading alerts every single week of trades that I'm actually taking. The pound yen trade was actually on last week's email analysis. All of that and much more, and also the EAP Training Program comes with a 60-day money-back guarantee. So if for any reason you don't feel like you're getting value out of the program, then just give me an email and I'll have my support staff refund you ASAP. So kind of a risk-free offer there. If you're interested, go ahead and click the link in the description labeled EAP Training Program, or go to www.eabtrainingprogram.com. If you're not interested, that's totally fine too. Make sure you're subscribed here. We come out with free content like this, trying to help traders as much as we can every single week. Make sure you click that like button if you made it to the end. Leave me a comment, and I'll see you guys in the next video. Talk soon.